Hello, hello, hi. Hello, testing, testing.
Good night.
Hello, hi, everybody.
Good night, good night.
Thank you so much for your patience. I had some doggone technical BTC related issues, and I just got my guy to fix things for me. So here I am again. My apologies. Now all I need to do is find my text again, my bloody text thing. So give me one more minute to find my text, and then we'll be ready to go. Oh, darn it. Bloody technology. Mhm. Okay, come on, baby, open up. Yes, what I'm talking about. Okay, again, thank you very much. First of all, let me just take my register to see who's with us, and then we can get started. I understand from Ms. Dean that we have one or two new persons who joined us tonight. So let's find out who they are, and then we can jump right into this accounting madness. Okay. Mhm. Let's see who's first on my list. Vanessa, are you there?
I'm here. Good night.
Good night, Vanessa. You made it to week 2. That's good. Did you get your textbook?
Yes, I did.
Wonderful. What edition is it, Vanessa?
I don't think there's an addition on it. It's Principles of Accounting. I emailed it to you, a picture of it.
You did.
Yes.
Yeah, look, I think
Needles
I'm-
Flowers 12E.
yeah, 12E. That's what I mean by edition.
Okay.
Yeah, 12E. Okay.
Mhm.
Now, I don't have my 12E yet, but I have my 11E, which is close to 12E, so that'll help me. That'll work for me tonight until I get my 12E. But 12E is the correct text. Okay. So when I'm rumbling on tonight, there might be a couple of little variances here and there, but it will not be significant. So you'd be able to follow me quite well if you are actually following in the text. So not to worry. All right. So Vanessa, this is your second week, isn't it?
Yes, it is.
Yeah. Did you have a chance to read chapter 1 yet?
I did. I went through it a little bit.
That's what I call diligence. Most students would be like, are you kidding me? I just got the text, so that's good. That's good. All right, let's see who's next on my list. Is that Hadis?
Yes, I'm here, Hardis.
Did I pronounce that correctly, Hadis again?
Yes, Hardis.
Doggone it. Good.
You're not even trying to pretend like it's not hard.
Yeah, that's the word. Unusual. You were here last week, right, Hadis?
I am the one that actually was given the incorrect link.
Oh, yes, yes, yes.
Yes, sir.
Indeed. So you made it to week 2 as well.
Yes, sir.
That's good because we have 14 weeks. And I'm saying this not only to Hadith directly, but I'm just saying it for for anybody else who's listening in, because we had a little housekeeping last week. So those of you who may have just joined us, you're going to get a little housekeeping along the way and a reminder for those who are with us. We have 14 weeks of this stuff to do. Is it 14 or 12?
14, eh?
14 weeks. Right? 14 weeks of this stuff to do. So there's quite a bit of reading and lecturing ahead of us, and homework assignments, which I'll give from time to time just to keep you honest and busy along the way. All right, so buckle down. Don't be discouraged. Before you know it, 14 weeks into examinations will be done, and you'll be on your way to accounting too. Sorry. Hello? 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 I'll call you back, okay? Okay. Okay, thank you so much, Hadis. Theodora. Are you there? Theodora. Not yet. What about Clinton Clark?
I'm here.
Excellent, Clinton. You were here last week?
Yes, sir.
Yes, I thought so. It looks to me, Clinton, like you are the only guy in the class.
Oh,
Did you know that?
no, sir.
I beg to differ.
I
Do
didn't know
we have
somebody
another guy in the
here.
class?
Yes, sir.
Mario.
Yeah, this is me.
Okay, Mario. Rocket. You were here last week, weren't you?
I certainly was.
Absolutely. Sorry, Mario. 2 men in the class.
Ah, there we go. That's it.
Yes, sir.
That's an improvement. Are you guys single or married?
I have a
Listen
fiance.
to me. I'm a 21-year-old man with marriage not on my mind.
You're only 21?
Yes, I'm only 21.
Yeah, you don't even know what you're doing yet.
No, precisely. So,
Even my baby is older than that, and he's not much older than that. So yeah, you can't even be thinking about marriage. All right, you just need to finish school, get a decent job, make some money, and then choose a bride.
there we go.
Right?
That's it.
Right.
That's it.
And in that order too.
Yes,
I
sir.
agree.
Okay. Make sure you don't find yourself in no oops situation like oops, and then
Oh, yeah, what no ups. Ups expensive.
very.
This is.
It's a lifetime of expense. So watch the oops thing. All right, stick with accounting.
Yes, sir.
All right. Danielle, Martin, are you there? Danielle? Okay. Dania. Roll.
Good night.
Hi, Danielle. Were you here last week?
No, it's my first week.
Okay, you're the new kid on the block.
Yes, sir.
Fantastic, fantastic. Welcome aboard. I'll come back to you a little later for introductions. So we're not going to let you off the hook.
Okay.
Crystal, Ram Seymour.
I'm here. Good evening.
Hey, I know Crystal was here last week, for sure. And then we have Blaine.
Good night, I'm here.
Hi, Blaine. I know
Hi.
you were here last week, weren't you?
Yes, sir.
Yes, indeed, Blaine. And then last but not least on my list is Denise Thompson. Denise?
Hi.
Good night, Denise. You were here last week?
Yes, sir.
Yes, indeed. Okay. So the only person that was not here last week is Daniel. And Danielle is not answering yet. And Theodora is not answering yet. I suppose they'll join us at some point. All right. So before we get on with it, Dania, can you introduce yourself to the rest of us?
No problem. My name is Tanya Rule. I work to Scotia Bank.
Okay. What do you do?
I'm a customer service officer.
Okay. And you were doing accounting because
Because to get my certificate. Mm.
Okay, that's a pretty good reason to do it. So you'll be doing accounting too as part of your certificate, I imagine.
Yes, I think so.
Excellent. So all you have to do is get through accounting 1 and then you'll be good to go, yes?
Correct.
Which I'm sure you'll do. Welcome aboard, Dania. And
Thank you.
all right. So is there anybody in the class that does not have the textbook yet? Everybody has a copy?
I
Is that a
guess
yes?
so.
Okay.
Yes.
How about that? So let me just say, the two ways to be successful in accounting is to stay ahead of your reading, and whatever assignments I give for homework, just do them diligently and to the best of your ability. I'm not giving you homework to be an accounting expert. That's not the idea. I'm not giving you homework to pull your hair out if something doesn't balance and all this stuff. Homework is designed to get you to practice the stuff that we discuss in our sessions and to raise any questions that you might have about any steps that you're trying to take and couldn't figure out. That's the idea. And of course, to share with your colleagues as well where you get stuck, because when you get unstuck, some other people may have been thinking about it, they just didn't say anything about it. Okay, there will be credit given for homework assignments. I don't usually assign a grade to homework these days. I just give you homework and I challenge you to do it, submit it, and every time you submit it, I give you credit for it. If you have any questions or problems along the way, I leave the onus on you to raise them and get it cleared up in your mind. Okay, college level stuff. All right. The key is to do the homework and submit it, and to do it to the best of your ability. And of course, to ask questions if and where you get stuck. That's the idea. A little homework reminder, the midterm exam will be around week number 7, which is halfway through. And the final exam will be around week number 14, which is the end of the semester. My examinations tend to be hybrid. It tends to be a combination of short answer definition questions, as well as problems. So you probably see 3 different sections on my exam. Definitions, like what is accounting? What is a debit? Little simple things like that, just to make sure you remember. And then short answer questions as well, and then some problems, like to really make you think and figure stuff out for a little while. Because without that, you're not really accounting for anything much. All right, so that's what you can expect in both examinations. They will not be cumulative, meaning once the midterm is done, it's done. However, accounting has a way one chapter builds on the other. So if you miss something from a chapter before and you're not clear, you might get tied up because the concept itself might roll around again a little bit later, like the double entry system of accounting. If you take a while to get that, you struggle a little bit until you get it, and then it'll be smooth sailing with a whole lot of other accounting concepts. Okay, but don't worry about it. This stuff is not magic. You're here to learn new and crazy stuff. So we all just jump in together and see what happens. All right. Dania, I gave the class my contacts last week. My cell number is 565 9551. You got that?
Yes, sir. 565-9551.
Yeah. And my email address is S as in Samuel, J as in Jack, H as in Henry, Wilkinson, WILKINSON @hotmail.com. All right. As I told the others last
Okay.
week, if you have an issue and you need to shoot me an email or drop me a text on something, feel free to do that. I'm always checking those things to see what's going on. All right. So please feel free. Also, homework assignments will be sent through my email address. And so you definitely want to make sure you have that. All right. Are there any questions before we get started? Okay. I don't know if I mentioned last week, but my classes tend to be open, dynamic, and like just yapping sessions. Sometimes I'll yap for a while, then I'll stop on purpose. Then I'll ask people randomly to read stuff on purpose, and I'll throw things out on purpose. And if you have any questions, concerns, scenarios, things at work you want to get cleared up, anything that you want to talk about in my sessions, you're free to do them at any time. Interrupt me. I don't take it personally. I want you to interrupt me because part of your final grade is about participation and attending class. So, I mean, you don't have to make up stuff just for the hell of it, but, interrupt me if you have any issues whatsoever. That's perfectly okay with me. All right. So let's begin at the beginning. And the beginning is, what is accounting? We might as well get past that first and foremost. Anybody knows? Anybody saw it? Anybody read it? I don't mind if you read from the text.
Yeah, sure. Accounting is an information system that measures, processes, and communicates financial information about a business.
Yeah, I'm happy she said business and not economic entity, even though they're both the same. Okay. Your textbook, 12E says business.
Yes, it says business.
Yeah, 11E says economic entity. I wonder what made them change it from economic entity to business. Maybe it sounds more accounting like to say business as opposed to economic entity. Interestingly enough, I'm also teaching an economics class this semester, microeconomics, and this thing about economic entity keeps coming up. Really, in essence, an economic entity is a business, in case you may not have known. Okay, just in case you see that again.
They have it as a government body though.
Say it again.
They have it as a government body for economic entity.
Who has it that way?
The textbook at 12E.
Yeah, interesting. Okay, so it's kind of used interchangeably, as you can see. And you'll probably see economic entity coming up with one or two other little interesting things connected to it. Okay, but in essence, accounting is an information system. And you'll find out very soon what we mean by it measures stuff, it processes stuff, and it communicates it. In a nutshell, when we measure information in accounting, what we're doing is we're measuring financial information, dollars and cents. Okay, we're saying what was the transaction? Because in accounting, everything must begin with the transaction. If there's no transaction, accounting does not want to have the discussion. Well, we'll listen if you insist, but accountants like a transaction first because it is from the transaction itself that accountants are able to measure what they need to do. Once we know what the transaction is, then we can go ahead and process it. It's the purchase of a piece of real estate for $50,000. Somebody's going to get property and somebody's going to give up money. Accountants love that. Now that we know what to measure, then we can process. Without information to measure, we cannot process a bloody thing. We're not interested in anybody's opinion. All we want to know is where's the document, which is called a source document, that shows the transaction so that we can process it. Don't ask the accountant to process it today and you bring the document tomorrow. We don't play that game. The game we play is you bring the document with the measuring information and then we'll process it. That's how we operate. That's how we should operate. Okay? And then how do we communicate it? Well, we make entries and we prepare statements. And you'll see a whole lot of statements. So, sure. Okay. Interestingly enough, this version of the text 11E, when it was using the term economic entity, it says that this is some kind of independent business, such as a hospital or a government body. Okay, so that's the example, right? So this economic entity is any kind of organization where some activities going on in terms of buying and selling, or actually exchanging resources. And we'll see all that in a little bit. Okay. Accountants are always interested in looking at the needs of decision makers. Who are the decision makers? Anybody who needs to make decisions based on the financial information, like the board of directors of a company, like the prime minister of the Bahamas, like the church who's collecting people's tithes and offerings, like they're always looking for financial information so that they can make decisions about how to allocate that money and those resources. And the accountant's job is to make that information available in such a way that the users can understand it. Okay? Because you'll see that accounting has all kinds of techniques that you have to learn to make it work. And so the typical end user will not know or be interested in the details. All they want is a bit of information that they can understand so that they can make decisions about what's going on. Okay? All right. What else is interesting? Do you guys have an exhibit 1.1 that talks about what the business is? It's a nice little picture. Do you guys have that?
Exhibit 1, yes, we have exhibit
Yeah.
1. Mhm.
With like some pictures and arrows?
Yes.
Yeah. If you look at that diagram, we refer to this in accounting as an accounting information system structure. What do you see? Like, if you just look at it as a layperson, just learning this stuff, what can you tell from this diagram anyway, right away?
It's a cycle.
Say it again?
It's a cycle.
Okay, yeah. First of all, it's a cycle. By the way, later on, we'll be looking at something called the accounting cycle. But yeah, it's a cycle.
One that pretty much shows how, oh, sorry.
Go ahead.
One that pretty much shows how the flow of events help each other in a chronological way.
Yeah, absolutely. Notice how the arrows are going. I wonder where this whole cycle begins. Can anybody guess like where this might begin? Like what would be
Activities.
Yeah, business activities. The
Mhm.
buying and selling of goods and services, of course. And then that information goes down to somewhere to be measured.
Mhm.
Notice what the measuring instrument is. What is it called in this in the diagram?
An invoice.
Yeah, and which we're all familiar with. So all of a sudden, this stuff is not entirely Frenchy. It gets Frenchy later, but we know about a business activity being translated into an invoice, and then once there's an invoice, it goes to the accounting department for
Processing.
processing. Once the accounting people have finished processing it, then it is communicated through a document.
Report.
Yeah, which is called an annual financial report. And you will see quite a bit of that along the way, the balance sheet, the income statement, the cash flow statement, all the things that make accountants miserable. I just use that word to make it interesting. They love it. Okay. So once this information is prepared and the financial statements are done, this information is passed on to the decision makers. Do you see them?
Yes, we
Yes.
do.
That faceless crew,
Mhm.
that unknown body. But really, they're board of director members, senior management, church leaders, any kind of leader or persons in charge of any kind of business or economic entity. Okay, by all means. Remember, economic entities or businesses can be profit or non-profit, but they're still business entities. That's the point. All right. And so, having introduced yourself to the business cycle. How about that? Now we can see what the business goals are. Another nice little diagram. The two primary business goals in any business happens to be what? Anyone? I hope it's in your text. The two primary goals of business.
I
What?
don't see it in the text.
Yeah, unless you're alluding to the fact that there's two types of accounting, which is financial and managerial. This book that we have doesn't really show another diagram about the goals.
Interesting. Doesn't have a nice diagram of the goals.
No, I don't see it.
I should have stuck with 11E. Does it say anything about what the two main business goals are?
No.
Narrative.
So I was saying like, if it's to like provide financial statements to be able to make decisions, then yeah, but other than that, we just got a bunch of words there.
But after that goes to account management, from business transaction to money measure.
Interesting. It doesn't say that the two primary business goals are profitability and liquidity.
No, I
It's later on in the chapter. Like,
Oh,
not the
later
end of the
on.
chapter.
Okay.
Yeah.
How do you know it's later on?
When you read through, you get to a place where those two words are mentioned.
Yeah, absolutely. Once you get to reading, you'll come upon those two goals as well. Absolutely. So they're not necessarily laid out in the same spot, but they are there. The two primary goals of business are profitability and liquidity. If a company or business cannot earn profits on a consistent basis, it will eventually shut its doors. For two reasons: no business is going to continue operating at a loss. Doesn't serve the owner. The owner's there to make money. And of course, liquidity is the other part of the problem when you're in business. Anybody knows what liquidity means?
Capital funds.
Yeah, capital funds. But more importantly, not only is it capital or funds, but it's having enough money to pay your bills. That's what liquidity really is.
Yes, sir.
Anybody in this room are liquid at the moment? Like, do you have enough money to pay your bills? Let me just remind you that I will be alluding to real world situations from time to time like that one, just to remind you that yes, you're here to get through your accounting examinations and to learn some of this stuff for your practical application at some point, but also to see how it applies to you as an individual. You will find some interesting things if you're very, very interested. Okay. All right. So the two business goals are profitability and liquidity. So if you open up your own business one day, which I'm sure some of you will do, you must know that you must have two primary goals. One, to maintain liquidity, to pay your bills, and two, to make profits. Because if you don't make profits, sooner or later, you'll start incurring losses, and then your doors will have to close. And if you don't close them, somebody will close them for you, like the bank. Any bankers in the room?
Yeah.
sir.
One. Well,
Yeah, one banker. But yeah, sometimes when we have a business entity, we borrow money to help us buy stuff, and then if business is slow, we can't pay it back, or we waste the money, we can't pay it back. So we don't have liquidity, we can't pay the bank back, and then the bank will foreclose, run off with everything, sell it, pay off the loan, and then you have to close your doors. That's a very simplistic version of some very serious situations in business that you don't hear about unless you're involved in the environment. All right. So the business goals are those two, and the business activities are threefold. You see them? If you don't, you'll see. Business activities basically has three parts: financing, which is borrowing; operating, which is the day-to-day business; and then investing, which is buying equipment, etc., in order to make the business work. Okay? These are very important terms in business. They're very important terms for accounting people to know. They're very important things for individuals who are not accountants to know, or accounting people, because these things impact you personally as well. Okay? So let's throw that out. By the way, did I say last week how many chapters we're going to attempt to cover this semester? Anyone?
I think it was like 12.
12
13.
chapters, yeah. We're gonna attempt to cover 12 chapters. Why do I say attempt? Because one or two of the chapters eh, might appear to be a little stinky in terms of all the detail involved in the chapter, but that's okay. We'll get through it, and I'd rather miss a chapter and cover one or two important ones more carefully than just to say we covered them. Okay, but that is our goal, which means that roughly we're going to be attempting to do something like one chapter per week, beginning this week, today. And so every day, what I want you to do is for next week, you go ahead and read chapter 2 and then go ahead and read chapter 3, because we'll be attempting to cover a minimum of one chapter per day, per week. Might we go over some weeks a little bit? Maybe. Might we not finish a particular chapter a particular week? Maybe. But that is our goal on average. So please do stay read up ahead by the one chapter. So when you roll in, it wouldn't be completely Frenchy. All right. Let's see what else. So we talked about profitability and liquidity. And I believe your textbook gave you some examples when you get around to reading it as to what these are. Nice thing about this text, it gives you some real life examples from the past and a couple from their past. Okay. The 3 business activities, don't forget: operating, investing, and financing. Now, these are examples of what I refer to as short answer questions. So come midterm exams, if I say to you, what are 2 business goals and 3 you should be able to riddle these 5 off and get some easy points. Just like that. But if you don't ever look at them again or never really learn them before, it's, oh my God, I should have looked at that. There goes 5 easy points down the drain. Okay, just something to keep in mind. Does your brand new text have a section called Focus on Business Practice?
No, I don't, let me see.
What kind of bloody text is that?
It's an old book that I have, by the way.
Oh,
Not
you have
new.
an old one? What edition do you have?
Well, I have the 12E, but I could see that the book has some wear and tear.
Oh, but that's okay. If it's 12E, that's fine. But nobody's come across a topical issue called Focus on Business Practice, just for reading?
Focus on business practice.
Not at all.
No, I don't see that. I don't see a heading with that.
Not at all.
These
I just
guys-
find the business activities on page 17, but yeah.
Yeah, that's interesting. Because that's why I like this edition, this 11E, because there's nice pictures, focus on business practices, like little real life stories, about what's happening in the world and how to apply the 3 business activities of financing, operating, and investing, and all that stuff. Man, okay. But that's fine. You'll pick up the concepts in its literary form anyway before the chapter is over. All right. Now, let us just pause for a moment. When we talk about financing and accounting and in general, we're talking about getting money from stockholders. Anybody ever heard that in your life? Raising money from shareholders.
Yeah.
Yeah. So she said, yeah, I heard that. Under what condition did you hear that? Don't mind me, I'm just trying to get you to chit chat.
I know. I heard about stockholders. I think we do some of that. By the way, I am the premium processing manager at Family Guardian Insurance Company.
You process claims at Family Guardian?
No, not claims. Premium processing, premium.
Oh, premium processing, yes.
Yes.
Okay, so what did you hear about?
I'm saying my company, I think they have some stockholders with something that they do there. Because, we're a corporation, but I know they do something with stockholders. I know
Yes,
that
they
for a
do.
fact.
Yes, they do.
Mhm.
Thank you for even putting it that way to tickle the fancy of those in the class who might have been wondering about it too, saying, yeah, I heard that word somewhere, but I don't really Hold 1 second for me, please. Don't go away. Okay, sorry about that, class. Some unexpected madness. On it. Okay, so stockholders, if you've never heard that word explained before, whenever a company is starting, somebody's starting a business, and they create a company in order to start that business, they need to raise money. And the way they raise money typically is to help people say, hey, will you invest in my business? Will you invest in my business? Here's why it's a good idea to invest in my business. And somebody says, okay, fine, I'll give you $50,000. So that person then becomes a stockholder or shareholder in the company, which means that they now own a part of that business. So one of the key ways to raise money in terms of financing activity is through shareholders, asking people to invest in your business. Okay? And of course, these persons are also referred to as investors. Then we have banks. We can borrow money from the banks if we need to, or anybody else who's lending money. These are all the different ways that we raise money, and we call this financing. Companies do it all the time. Some do it a bit too much. Okay? Operating activity has to do with the sale of goods and services through all the various institutions in and around the world. And then the third activity, investing, means that you're taking your money and you are purchasing assets such as furniture and equipment and computers and buildings and land and all this kind of stuff. So all of these things are swirling around in the business world, and accountants are called upon to make sense of it when it comes down to the dollars and cents. So if I were to ask you many weeks from now in your midterm exam to describe the three business activities and give examples of what occurs under them, you should be able to say right away financing, investing, and operating, and give an example of at least one of each. Okay, just like that. The other thing about your text is it likes to give a little examples of about companies like CVS and General Motors because they're very big companies, very prominent companies. And so please, you should read it. I am not going to hold you responsible for remembering all the details and of all the examples they give to enlighten you, but you should read it just for general information and to augment or support the concepts that we are going to be discussing. Okay, folks? Don't forget, interrupt me anytime if I say something weird. Say, excuse me, what does that mean? Or why do you say that? Okay. The other thing in accounting, it's a shame you guys don't have focus on business practice. My. That bloody 12th edition. All right. The other thing in accounting is you need to know the difference between management and financial accounting. Okay. They exist in the same environment, but they mean two different things. First of all, when we talk about management accounting, we're talking about what we call internal or inside decision making. In other words, the department heads inside the firm asking for reports every day on the number of items produced, the number of items lost, number of items broken down, wasted, thrown away, whatever the case might be. How many employees come in to work every week, how many play hooky, how many people are sick in the month. All these kinds of things are what we call management accounting data. And so on any given day, the head of any type of department in any organization can call for very specific kinds of information. And that information, when put together in any form or fashion, is referred to as management accounting or management reporting. Okay. Financial accounting, on the other hand, deals with the external communication process. Management accounting is internal. External accounting is the external accounting process. And by external, we mean that at the end of each month, quarter, or year, depending on management's agenda, they will require that certain special statements be prepared for investors, for their banks, for the government, and so on, so that these external users can know what's going on within the company. Why do you think the government would be interested in external financial statements, anyone?
Because they have a lot of external entities, I would say.
They do. And when the government looks at an external financial statement, which one do you think they might be looking at particularly? A balance sheet or income statement?
With the income.
Yeah,
Okay,
yeah,
yeah.
yeah, the income statement. Why would the government be interested in a profit and loss statement, income statement?
Okay, boom, good question. Can you like
Yeah,
not go over, but like quickly say what exactly the external, you were saying something about the external decision makers are?
the external decision makers, the external
Yeah,
decision
all right, I
makers,
guess give an example.
yeah, people like your lender, the bank that you borrow money from for your business. Why would they
Okay.
want to see your financial statements, you think?
To see whether or not they should give you money
How well your business is doing, yeah.
Absolutely,
to be able to pay
because
them back.
yeah, see, that's it. To see if you can what? Pay them
Pay
back
them
their
back.
money. They don't
Yeah.
care what your program is, as long as they're satisfied that you can pay them back. And if they see any financial statements coming out that looks a little rickety at any point, the bank will then move in and foreclose on its loan, see?
Okay.
And shut you down if necessary to get its money before you don't get their money to them. So they're always
Bankrupt.
watching, yes, to
Of
see what
course,
you're
man.
doing.
Sound heavy.
Yes,
Sounds scary.
Mhm.
it is spooky because a lot of companies have gone into bankruptcy because they couldn't afford to pay their bills. And one of the primary bills they have to pay was the major creditor, the bank. Okay, your bank
Seeing
is
like
your.
how, oh, yeah.
Go ahead.
Seeing like how you mentioned the word bankruptcy, right? So going to, well, let me just put it like this. I would assume, based off everything we talking about this far and what we read, right? I would assume that one of the reasons why the goals of the business is like, I think it's liquidity. Liquidity, being able to pay their bills is because, um, well, of course, I don't want to go into bankruptcy, but one of the things that depends heavily on that is how fast their customers pay them money, correct?
Correct.
Okay.
Absolutely. Which is why when you are in business, you have to be checking your liquidity very carefully. See that word again? Because you
Right.
always have to make sure that whatever the hell you're doing, you have enough money to pay the bills when those bills come due, correct?
Right. So, Mr. Wilkinson, in the case of an insurance company, I know we normally use the terminology solvency.
Right.
Is that the same as this liquidity, or is it something completely different?
Not completely different. They are related.
Okay.
When a company is solvent,
Mm-hmm.
it means that the company has assets that are greater than liabilities. In other
Right.
words, they can meet their commitments as they come due. Okay.
Yes.
Now, when those liabilities become greater than those assets, then a company is considered to be insolvent,
Yeah.
meaning that they're no longer able to pay their bills as they come due. Okay.
Mhm.
Remember the problem
Basically,
with
solvency is good.
Yeah,
solvency is
solvency is good. Yeah.
you always want to be solvent. And what is
Yeah.
solvent? Being able to pay your bills when they become due. Trying to
Yeah.
make sure that your assets are greater than your liabilities. That is what makes you solvent. Sometimes you might hear, if you're watching celebrity stuff, you might see on Facebook or online somewhere that a celebrity's net worth is, correct?
Right.
Now, the reason why we say net worth, because what they do is they take everything the celebrity owns, whatever it is, cash, property, whatever,
Minus the
cars,
liability.
and subtract everything that they owe.
Right.
And then whatever is left, then that's what you're worth.
Right.
So if you have $10 million in assets and $11 million in liabilities, dog eat your lunch. You don't have any
You
net
broke.
worth.
You
Yeah,
are
you're
broke.
broke. Yes.
That's the average Bahamian. Sorry.
Yeah.
Good.
You are broke. You are technically insolvent. Now, a lot of people string along, getting bank loans, borrowing money, getting overdrafts, whatever this is, trying to stay afloat. Borrow money from Peter and Paul, family members, whatever, to stay afloat. But sooner or later, if you're not careful and do something about it, you will drown because eventually your sources of cash are going to dry up.
Yeah.
Family members are gonna tell you, you don't ever pay me back. Get lost. I don't care if you're my son. I love you, but get lost. I've loaned you enough money that you don't pay. Whatever. The bank will say you're not paying the bank. If you don't do something, we're gonna foreclose on you because you can't pay. Okay. So yeah, you have to always be thinking liquidity and solvency in your personal life as well as in your business life. And companies are constantly doing this all the time to try to make sure that they have enough money on hand to pay their bills when they come due, especially bills like salaries, utilities, taxes to the government, and doggone bank loans at the top, if you have any. All right? Because banks don't play. They'll work with you for a while, and if you don't follow through, they will drown you because they need to get their depositors' money what? Back. Correct?
So
Remember,
quick question
yes.
about this foreclosed thingy, right? So let's say John is the owner of a company, right? And John gets 50 grand. Let's exaggerate it. So John gets 500. They probably can give him 500. Let's say you get like 150 grand, right? From the bank, from Commonwealth Bank, right? Commonwealth Bank put all this money in John's account over time, right? And he has a bank account in Commonwealth Bank. If Commonwealth Bank was to foreclose on him because he's not paying it back directly, does that mean that they go in his account with the 150 million,
Whatever
like
you have
without
there,
him
yes.
knowing, and they just yuck it back to that?
I'm not a banker, but yes.
Uh,
The bank.
That's cool, man. That's scary, man.
no. Technically, it doesn't work quite like that. Here's what happens. If how much did the company borrow?
150,000.
1,000. Okay. Now, if you borrow as a company 150,000, you have to tell the bank what you're going to use the money for.
Right.
So let's hypothetically decide what is this money for? Anyone? What is the money?
Building tablets.
Building.
Tablets like iPads.
Okay. You want to build some tablets. All right. So that money is going to be used to purchase all the equipment necessary to build the tablets. Correct? Plus, some of that money is going to be used to pay the staff members who will be building the tablets. True? So here's what you have to do as a business. When you borrow money, you need to make sure that the reason you borrow the money is a good one. Building tablets is a good one. And that you get those tablets made as quickly as possible and sold at the best possible price. See?
Yeah.
So that you can have the money from the sales to pay the loan each month. So as long as you're paying the loan, the bank will not bother you. You can use up most of the 150,000 to buy equipment and parts and all to make the tablets. And let's say you have 30,000 left in the bank account after doing all that. But for some reason, sales didn't take off or they slowed down and you can't pay. What will the bank do? They will foreclose on you and take all of your assets, including what's left in the bank account, pay off the loan, and dog eat your lunch. If you
That's
still have
right.
money left owing after they pay off their loan, they'll run you down in your grave for that too.
So y'all making it sound like they really do this? That's wow. That is wow.
So Mario, what you expect if you owe the people?
What
I know I just bought, so I learned it.
what I'm really saying is whether you're a business or a person, make sure when you borrow for a good reason. Make
Yeah.
sure you have the ability to pay the loan back and make sure
Absolutely.
you bloody well pay it back. Because
Yeah.
some people have the money to pay, but they don't pay. Instead, what they do is they go to Fort Lauderdale again. They go to Dubai. They do all kinds of nonsense. They give it to their favorite girl who looks all sexy when she puts on a mini.
Oh Lord.
Why you talking to me like that, man?
He's the BBL. Cool.
Did I step on any toes? Speaking, let me see who's the youngest in this class. The youngest guy. That must be doggone Clinton, 21. Because I'm sure, Mario, are you older than 21?
That's actually me.
Oh, Mario's 21.
Yeah,
Yeah.
so you were talking about him.
Okay. So Mario,
Mhm.
let me just put you on notice since you're only 21. When you see a girl in a mini, what do you do?
Me specifically?
I know I put you on the
No,
spot.
guys. No, guys, run, man. That's trouble.
It's all
That's
part of the
trouble.
it's all part of the accounting. Do you
You can check this.
do you measure, process, and communicate? Well, sometimes we do. It's something about a girl in a mini just that drives the average guy. I don't know what the hell happens. But anyway, crap happens. So what you have to do is if you own a business, Mario, don't use your business money to be distracted by stuff and then all of a sudden you can't pay your
Bills.
loan. Yeah, and your bills. Yeah. Because sooner or later, if you don't, your business will be gone and so will the mini.
When you lose everything.
Well, that's how it works most times.
That's why I tell you, I run. That's trouble.
And so I didn't put you on notice. No, no offense to our lovely ladies, and that they look great. You just have, and nothing wrong with in contact. You just have to make sure you don't use your bank loan payment to do stuff you shouldn't do. Otherwise, you will have to give an account. See, accounting again, one way or the other. All right. So I hope that answers somebody's question. All right. I use that example so you could remember. The next time you have a bill to pay, pay it. Don't let anybody distract you, but let's go to thing them. Okay? And your bill goes unpaid. And then they repossess your car, close your business, shut you down, or whatever the case might be. And then you start with, why does God hate me? God has nothing to do with it. You just didn't pay your. You just didn't pay your.
Bills.
Simple. BILL. Simple as that. All right. So then, before we go any further, you need to know the difference between accounting and bookkeeping. Bookkeeping is the mechanical side of accounting. Bookkeeping is very repetitive. Bookkeepers take transactions every single day and record them in what we call a general ledger. You'll see that later on. Does that mean the bookkeeper's job is unimportant? The bookkeeper's job is by no means unimportant. It is the most critical, one of the most critical part of the accounting process, 50% critical. Okay? Because if the bookkeeper's information is wrong, what happens to the final statements, anyone?
Also incorrect.
Of
Yeah,
course.
they'll be incorrect.
Of course. So we have to have our best accountants and bookkeepers doing the bookkeeping, the recording of transactions so that it's done properly, completely, and correctly. And once it's recorded in the ledgers, the accountants come in and prepare income statements, balance sheets, cash flow statements, and other stuff. And then they present it to the internal and external users, whom you now know. And the internal and external users then use that information for planning and decision making. Okay. But that's the difference in case it ever comes up in your discussion. Okay. You will also see an expression called MIS, Management Information Systems. And what is Management Information Systems? A whole bunch of information coming from all parts of the business. Everything that you need to run the business is part of the MIS. The sales figures, the expense figures, the liability numbers, the asset numbers, the equity numbers, all of these things are MIS stuff. Because MIS is simply Management Information System, which means any information coming to management to help management to make a decision. Okay? How do you think, for example, your company would measure the productivity of an individual employee? Anybody? What would be one way to measure the productivity of an individual employee?
I wanna say like how much times they come to work. Let's say like how well they bring in more clients, if that's possible.
Yeah, actually, the first part of it would have been sufficient. How often do they come to work? Because there are some people, they spend a lot of time not coming to work. They're sick day, the other sick day, the other thing.
So you manage the activities.
Yeah, COVID again, COVID for the third time. Whatever it is, they find a reason to stay home. And then we have that gang that they come to work every day and still don't get much done. You know anybody like that?
Yep, I know some persons like that.
They will never miss a day, but they're still unproductive because
Yeah.
they're running around having lunch, breakfast for hours, lunch
Yeah.
for hours, brunch for hours, inside and outside of people's offices, on the phone, on the internet, on YouTube, and on Facebook all day. And so they're at work present early from 9 to 5, but each day they're getting nothing productive done. Which employee would you prefer? The one that is off a couple of days a month or the one who comes every day and never gets a bloody thing done?
Depends on
One that's
the
off.
Whoever's more productive.
One is off.
The one who's off, that's the one out there.
Yeah, because if they come in and be more productive.
Yeah, when they come in, they work.
get out of them. Mhm.
Yeah, they may take 2 or 3 days off in a month, but those other 27 or 28 days, they're working. As
Yeah.
opposed to that other person who will come into the staff meeting and say, yeah, I don't never miss no day from work. Yet we all know that when they come to work, nothing gets done. But they're there every day. All right. Your chapter one says anything about ethics?
Yes.
Yeah.
Say something about ethics.
Yeah, what does it say about ethics? What does it say?
Yeah, there we go. I know it's saying like the basic things about this stuff. It's like integrity, objectivity, something else.
Ethical. It says about ethical financial reporting.
Yeah, what does it say in a nutshell? What's the
This
question?
ethics is a code of conduct that applies to everyday life. It addresses the question of whether actions are right or wrong.
There you go.
Mhm.
Ethics addresses the question of what's right and what's wrong. Of course, you're going to read all of that crappy stuff. Well, not, you know what I mean, not crappy. You have to read all that.
Which
Okay?
page are we reading from, please?
We are reading from page 19. Ethics is especially important in preparing financial reports because users of these reports must depend on the good faith of the people involved in their preparation.
Absolutely. Why is it that we have to depend on the good faith of these people? Why? When we say we're talking about management or anybody in charge of the business entity. Why do we have to rely on good faith?
But that's all you have to go on. I mean, and
Yeah.
their information have to be correct in order for you to report correctly as well.
We have to assume
Plus,
that they're doing everything honestly and correct.
Correct. Yes.
Okay? That's what we mean by ethical reporting. That the information is being received that is correct and the information is being processed is correct. If you think that's normal practice everywhere in the world, it is not. There's a whole lot of unethical accounting and other practices going on everywhere in the world. They even have unethical behavior in church. Did you know that?
cool.
In church.
Absolutely.
In God's
Isn't
house.
there something like a fraud triangle?
Fraud?
Yeah, like a fraud triangle. Like you need a reason to do fraud, like you need like a basically like how we talking about unethical behavior within the
Yeah.
business.
Yeah.
That's why I was asking, isn't there like a fraud, basically like an unethical triangle that tells why the unethical stuff happened, called the fraud triangle.
There is such a description given by one such person in an effort to describe why people engage in fraudulent behavior. But whether it's a triangle, rectangle, or obtuse angle, whatever, the point is, I know the triangle you mean, because they kind of make some connections as to why people commit fraud. And the list is a long one. Okay? Why do people commit fraud? Is fraudulent activity actually ethical or unethical? I hope you know by now that fraud is unethical.
Unethical. Mhm.
Anything that you're doing deliberately wrong. See, if you make a mistake and it was not deliberate, then that is not
Negligent.
considered unethical. That's
negligent.
negligent. Yes. Thank you very much. Way to go. But the moment it becomes deliberate, that is sick.
Mhm.
And people are not sick anymore. Back back in the old, back
I'll mute my mic. I'll mute my mic.
Please, Mario.
a couple of years ago, they used to say mother sick dread. Do they say that anymore?
Yes, they do.
They still, Mario still say that. now.
Them 21-year-olds, of course.
Yes, indeed. Mother sick dread. Okay. All right. So just remember, in life, in business, and accounting, ethical reporting activity is what is required. Stay away from fraudulent reporting, fraudulent behavior. Do not let anybody say to you, since sales was only 50,000 units this month, let's record it as 100,000 so it looks better. That's fraudulent. Okay, folks? Even if the boss tells you that, tell him I'm sorry. According to my accounting class last evening, that is an unacceptable behavior. And then the boss will say, this is my company, I'll fire you. Then you have to say, please feel free. I need a job dead bad, but I'm not prepared to be fraudulent to keep it. That is really the ethical approach. Now, do people take that approach? Oftentimes, hell no. People do all kinds of crazy stuff. My job is here to tell you what you should do. What you choose to do is a whole different ballgame. Okay? Key and point, try to do the right thing. Simple as that, whether it's an accounting activity, personal activity, whatever the activity is, you should seek to do the right thing, the ethical thing. Does anybody have a piece in their text on Enron?
Yeah, I saw Enron.
Yeah.
Enron Corporation.
You see it?
Yeah, it says something here about some fraudulent financial reporting that took place.
Yeah, can you read that little piece on Enron? Let's see
Well,
what
it said that whatever the motive for fraudulent financial reporting, it can have a dire consequences, as the accounting scandals at Enron Corporation and WorldCom in 2001 and 2002, respectively. Unethical financial reporting and accounting practices at those two major corporations caused thousands of people to lose their jobs, their investment incomes, and their pensions. They also resulted in prison sentences and fines for the corporate executives who were involved.
There you go. For those of you who never heard about Enron, what's the name of the other company?
WorldCom.
WorldCom. They were multi-billion-dollar companies in the US. But because of fraudulent accounting and other practices, the companies eventually failed and went into liquidation, never to rise again. Thousands of employees lost their pensions for 30 and 40 years of contributions. Some people even committed suicide. They couldn't take it. Lost everything they worked for because of fraudulent practices by senior management of the firm. True stories. Okay? So fraud doesn't just cause somebody to take your $50 and not pay you back. Fraud goes much deeper than that. It can cause notice I didn't say million. Millions would have been bad enough. Multi-billion-dollar failures. Spooky. All right. Some food for thought. Do you have stop and apply in that chapter? Anywhere in that chapter 1? Stop and apply.
I think that's only for the 11th edition.
What a shame.
Okay, you're full with something.
Yeah, that stinks. All right. Moving right along then. The decision makers that were referred to earlier are oftentimes referred to as the users of accounting information. And one of the key culprits of who use accounting information is management. You guys know who management is, right? Any management in your firms?
Pardon me?
Any management people in your company?
Yeah, I guess
So,
so.
the directors or directors.
It's funny. Okay, let me back up a little bit. In the insurance company, British Family Guardian,
Yes.
Any managers work there?
Yes, of course, I am one.
There you go. So you know about that. You know about
Oh, yes, I
management.
do all too well, because this part of it is, it hit home, it hit directly home for me, because the way we're set up, I am in charge of all of the premiums that come into the company, right?
Right,
And so what I learned right here, well, I knew long time, is that we have what we call a cash summary.
right.
And so we use that, the persons that I manage use that to record everything that happens in each office. And so it's important for me as a manager to ensure that the information is consistent, it has integrity, you know, to make sure all the annual reports, because that information that they have, and they input that every single day into that cash summary, that goes to our finance department. So that information has to be correct in order for their report to be correct. So all of this is just tying in.
Absolutely. There you go. It's beginning to tie in. And some more, I was gonna say crap will tie in. You're not crap. I just said that so you can remember. Absolutely. Okay. So especially when you're dealing with cash, right?
Yeah.
Cash is a company's most liquid asset, and it's the asset that people are always willing to thief. That's a Bahamian word for steal. Do we still say thief?
Yeah, all the time.
Yes, we do.
Yeah, we
We
still
do.
say thief. Why not? I have two sons. I've been trying to teach them Bahamianese. I can't believe they actually grew up in the Bahamas, but they don't. One lives in New York now, one lives in Canada, they say. But I've been trying to teach them Bahamianese. But the problem is they didn't learn Bahamianese very well for some reason. But when I was growing up, I learned Bahamianese before I learned the Queen's English. Anybody heard about Queen's English?
Yeah.
Yeah.
Still learning.
I didn't always speak this way. When I was a little boy, I spoke the way my Grammy spoke. And that's like, come on, that thing where you're going, I don't get me wrong. That's how that's how the people in those days spoke. It's okay, nothing wrong with that. It's dialect, isn't it? Just like any other Caribbean country, any place in the world, when you're talking, you're wrong for that. That's the same thing, it's dialect. The point I'm making is it's interesting how some people pick it up and some people don't. And so now, since they didn't pick it up, I tease them about it. I said, try to get them to speak the dialect. And it's an amazing thing to try and hear these boys who grew up in the Bahamas their entire bloody lives fighting to speak the dialect. And I must confess, I am responsible for that to a point, because I should have taught more stuff like this early so they could get it. Then they could say like that. But it's okay. Nothing wrong with that. I say all that to say what? Everything ties in. See how this stuff is connecting, Miss Family got in, it all comes together.
Yes.
And
Yes,
you're gonna
yes.
see a lot of other interesting things come together.
Mhm.
And you're gonna learn already that cash that you've been managing,
Yes.
that's the reason why you have to watch that so closely.
Yeah.
Because the minute you stop watching that, somebody is already watching you stop watching it.
Absolutely.
And the first opportunity they get, somebody is going to do something. What's the word? F word. Fraudulent.
Fraudulent.
Yes. Yes.
Or they gonna teeth.
Yes. Thief some. Because cash is very tempting. Okay. Only a few of us can handle cash independently without feeling seriously tempted. Okay. So I don't envy you in that cash area. And yes, you have to watch that with your life. There's a reason why you have to balance check it every day, all day, post it every day. You can't leave nothing hanging over. Because if you leave anything hanging over and some money's hanging around, it might tempt somebody to do the F thing again, which is,
Fraudulent.
yes. Okay. Hope I made my point, because the cash issue is a thorn in the side everywhere. Why do you think WorldCom and Enron failed? Because they're a bunch of greedy bastards who already had millions of dollars and wanted more millions. You follow?
Yeah.
Cash. So they did all kind of fraudulent stuff to get the money out of the company, even resulting in the company's falling apart. All those persons who lost their pensions, commit suicide, and couldn't have anything to live on, they didn't give a damn because greed supersedes what? Everything imaginable. Was I dramatic enough on that one?
Yeah.
Yeah.
Good. So I just wanted to remind you, so in case somebody tried to get you to be unethical, see, and commit any fraudulent and corrupt stuff, you could say, no. I did my accounting class and my professor was quite adamant about, I'm smiling because it's easier said than,
Done.
no doubt, but you have to try. All right, so the management handles the day-to-day, the finance, investments, the day-to-day operation, the marketing, human resources. That's the management side. That's the decision makers making on the management side. Then you have the investors and creditors. They make decisions about whether they're going to put any more money in your company. That's what the investors do. Should I put more money in that company? They haven't paid me any dividends yet. I'm not putting any more money in. Get out of my face. And of course, the creditors, the bankers will be making decisions. Shall I call my loan? Are they paying me correctly? Are they paying me on time? Should I lend them more money? And then finally, who's the third group? Anybody know? Those people with what we call an indirect interest, like the government tax authorities, like that. Labor unions. Why are labor unions interested in financial information from the company, anyone?
Labor union?
Probably to see, probably to see how much, probably to see why. Is a labor union the people who deal with ex-employees when they're terminated?
Yeah, that's one thing they do, yes. So
They
why?
So
Contracts?
they can analyze they can analyze the revenues from companies to check the scale of pay that that their clients are getting. That's the only thing I can see coming from that. Why they
From
are
the
Well,
so
that's a good start because that's primarily what labor unions always want to do. They check in to see how much money the company makes so they can start fighting for raises
Right.
for their members. Okay, so if the company makes 50 million, if the company makes 50 million, if we can't give a raise, it's been a tough year, then the labor union gets dead, man, call a strike.
But usually do they compare it to different companies and go by like pretty much like Glassdoor and compare them.
Sometimes, sometimes, but not always. Once they see the money, they don't care what's happening otherwise. So you make all that money, you don't give us a raise, we're gonna
Yeah.
stop working. You
Yes.
know
Right.
that
But
bastard stinky
but
management.
but usually government takes profit on in terms of business license, so you could actually you could have a high revenue, but your net loss could be almost matching exactly what your revenue is. That means you wouldn't even make a profit. So how
Could
could they
be,
give a raise in that regard?
could be, but it wouldn't be the government particularly, because when taxes are collected, that's not part of the company's revenue. They're just collecting it on behalf of the government.
Right.
Consumers pay the
So
taxes, okay? So it's not part of their revenue. However, it could be a case the company's had a difficult year and some unexpected expenses came up and caused their profits to be low and affected their cash flow. And so even though they've made a ton of money in sales, by the time they've taken in all the expenses and other commitments,
Yes, no
the
big
profit
profit.
might be, yeah, kind of low. But
but that
unions don't care about no net profits.
but doesn't our government take they use the business license fee as they go against the revenue, right? Last time I
Yeah.
checked.
How much your revenue? Yeah. The 100,000. I think I know what you're talking about, Clinton.
Yeah, the business license fee is an expense of doing business, but
So what
it's not a major expense.
it's not a major expense, but I mean if you're let's say your overhead matching almost your revenue and you put on top of your business license fee, that means you incur a loss for that year though.
Correct.
Correct.
But unions don't care about that unless you could persuade them that you really having a difficult time and you don't have any money to give them a raise. Because see, sometimes you could suffer a loss because of that and still have money in the bank.
I understand, but in terms of that, you still have to have a certain reserves, like usually like banks have. I mean, in terms of how our economy going right now, I'm sure they cutting down on the reserves that banks could have in their physical banks. So they trying to have it there so they can have the liquid for, I'm guessing, for revenue in terms of transferring it out.
Well,
That's-
remember now, the banking situation is going to be different from Hog Dog and Company down the road. That's a
Exactly.
That
different.
is true.
Yeah, for the banking system, they have all kinds of money. Banks around the world made more profits during COVID than dog. Okay,
Wow.
But in essence, banks are only able to lend out so much amount of their reserve. They're not allowed to lend out everything
no,
Yeah.
by law, by central
no,
bank law.
of
You
course
still have to
not.
cover your books. You still
Of
have to
So
cover your book.
they will always have a
No,
reserve.
the bank will lend out anything they feel like if nobody's watching them. The problem is the central bank of the Bahamas is
Mr. Wilkinson always talking about some fraudulent activity.
because something
Anyone?
fraudulent is always going on. If you turn around and look behind you, you might see something fraudulent.
No, I'm just saying my bad head, sorry.
But yeah, the reason why you have regulators like the central bank is because banks will do all kinds of crap if you don't watch them. They're being watched and still doing crap. Banks are being fined all over the
Bank
world.
is the crookedest and anyway, sorry.
No,
Yeah.
don't apologize. They're being fined millions of dollars every day for some crooked stuff, some
Yeah.
unethical stuff, not being compliant. They're doing all kinds of stuff, and they just pay it and do it again. Okay, but that's the financial services side. But in terms of people who are in normal businesses like selling goods and services, otherwise, they have to be watching their agenda very carefully to make sure that they keep things together. Labor unions are always looking to see if the company is making any extra money so that their members can get a raise. Sometimes the company can get away with saying we didn't have a good year, so there'll be no raise. And other times they might try and pull that off and people say, fine, we don't care. You said that last year and the year before, we're not coming to work. Shut down the plant. And then management has to give in. Okay, that's how it works. So it's a back and forth thing. The point is the decision makers are in three categories: management, all right, those with a direct interest like creditors and investors, and those with a direct interest, indirect interest like the government and labor unions and even customers. Why are customers interested in what's going on?
To see whether or not they could
They're in a stable company.
Yeah, they want to see if it's a stable company. If they customer use a certain product, they want to know if the company's going to be here in 3 years, so they can
Right.
keep that product and so on.
especially people like who buy stocks or buy shares, whatever it's called and stuff.
Yeah, well, that would be the investor side. The investor is a little different from the customer. Okay, but the principle is they have interest in the company for different reasons. Okay?
Yeah.
Customers like stability too. They don't want to think that when they
Yes.
come around next year, the company that they buy their favorite product from is not there anymore.
Or they invest some money in
Yeah, they some
an
other.
annuity or something. Mhm.
All right, absolutely. So right down to the customer. Okay. So we kind of, yeah, looked at those users with a direct financial interest, those with an indirect financial interest. All of them are interested in this financial information. When you are reading and studying this material, reading is for your enlightenment and development, studying is for your examination and retention. And so, again, if you're reading, for example, what are the three decision-making groups, you should want to say management, direct users, and indirect users. That's three easy points. And if I say, give 2 examples of each one, then you should just be able to give 2 examples of small points, just like that. Okay? What would be an example of an indirect financial, indirect use of financial information?
The labor union? No?
And it's right in your text. I don't mind if you read it from the text.
Tax authorities, regulatory agencies.
Absolutely. What is an example? 2 examples of a direct use of financial information.
Indirect will be the customers.
Who
I
are the
reckon
good?
be the investors and creditors.
On the
Yeah,
management.
the investors and the creditors. What would be two examples of management users?
Like in that.
Accounting and marketing.
Absolutely. And see, this is how you study this stuff for examinations. Make sure you can answer questions like that. And then the homework practice will prepare you so when I give examination questions, there won't be stuff out of this world that you've never seen or discussed in some form. We would have done it. For those of you who do the homework, you'll have an easier time doing the exam questions. Those of you who's like, man, I'm not doing any bloody homework. Then the examination question, I'll just read and remember. I wouldn't suggest that. Okay? Practice makes perfect in accounting. And I don't have to assign homework for you to take a problem or a question or something and simply do it. Because like anything else, what made Kobe great? While everybody was sleeping, he was shooting baskets. Same with Michael and all the other people who do that stuff or anything. You have to keep doing it over and over until you're sick of it. And then you know that you're ready for example, examination. Okay?
Yes.
All
sir.
right.
Wilkinson, I have a question.
Yes.
While we may have a variation of textbooks, like in my case, I have the 12th edition needle, but
Uh-huh.
as you were going on, I do have I guess like some of those terms like ethics and other terms you've mentioned goes
Yeah.
a bit further in my textbook, like the indirect and direct uses are actually a part of my chapter 3 now. So I'm just making sure when we have homework or exam time, we're not going based on chapters because we have a difference here in textbooks on information, I guess, based on those chapters.
That is interesting. Your thing is in chapter 3?
Yeah, this is section 3 now when you're referring to the indirect and direct.
Yeah, that's chapter 1, section 3.
Chapter 1, section 3?
That she's referring to.
Well, it's okay as long as it's chapter 1.
Yeah, it's chapter 1.
Yeah, the section doesn't make a difference. As
Right.
long as you find it in chapter 1, you'll be fine.
Fine. Okay.
Yeah, because I know they have it broken up in sections and
Right. Okay.
depending. Yeah, that's okay. As long as what I'm referring to is in chapter 1, you're good to go. Okay? Yeah. All right. So having laid that foundation, then let's look at some other terminology in accounting. Notice we spent a lot of time in chapter 1 messing around with terminology. And the reason for that is you need to know what the terminologies are for your examination and for your personal use and for your business use at work if necessary. That's the whole idea. You're learning this stuff for a whole lot of reasons, known and unknown to you. All right? So how do we define a business transaction? Anyone?
Exchange. That's whether it's an exchange for value or an exchange for no value. For example, an exchange for value would be like selling a good and getting money for that. And then
Okay.
like an exchange for no value would be recording or becoming aware of when not the money, like stuff like a loss. Like you lost a sale to Walmart or stuff like that.
Okay, yeah, that's definitely an example of a business transaction. Anybody else?
I guess a business transaction is any type of change or impact to a business's finance,
Okay, that's another
whether it's
example.
positive or negative.
Yep, that's another example of a business transaction. Do we engage in business transactions every day?
Yeah.
Yes.
Yeah, for example, give me an example of when you engage in business activity. Business transaction.
Buying gas.
Sorry?
Anytime you receive funds from a client.
Customers.
Yeah, when you
Client.
receive funds from a client.
It can also be in the form of services, right? Not necessarily monetary.
No, it could be services like what, for example?
Any services like just your vendors, maybe, I don't know, business transactions, cleaning of departments, whatever it is, it's a business transaction. They're getting paid for it.
Of course, that's a business transaction. Okay. When you invite somebody out to dinner, is that a business transaction?
Depends who you invite.
Yeah, she's
So you're
right.
saying,
She's right. Typically, the answer is
A good
no.
one, Crystal.
So typically, the answer is no. But depending on who you invite, it might turn into a transaction.
Absolutely.
Absolutely. So whenever there's an exchange of goods and services of any kind, we say typically that that is a business transaction. Whenever there's an exchange, see, whenever there's an exchange of goods and or services, that becomes your typical business transaction. Okay? Secondly, business transactions are usually measured in money form, monetary measurements, meaning dollars and cents and nothing else. Okay? In accounting, we don't deal with anything other than dollars and cents. Of course, we can exchange currency from dollars to yen, from yen to Canadian dollars. Speaking about Canadian dollars, whoever's 21 in this room, do you guys still rely on your parents for stuff? 21-year-old-ish is
not necessarily.
very
If I
necessary.
get a pay, if I get a fat bill, but I gotta pay like at one time, like around $4 grand, yeah, I ask him for help.
That sounds good.
But like, stuff like paying your life insurance or paying the phone bill or water bill or something like that, then yeah.
Okay. Well, of course, you're fortunate enough to have parents to ask, and that's always a plus. Okay. In those kinds of situations. So the whole idea is that transactions, by the way, when a child when a child asks the parent for help, is that a business transaction?
This is
No.
my kids here. It's always some monetary transaction.
It depends on the perspective. Right?
Well, let me put it this way: if you ask your parents to borrow $500 and then you pay them back, that's a business
A business
transaction.
right, help is
If you
different.
ask to borrow $500 and don't pay back, that is not, well, that is a business transaction too.
That's a debt.
You just didn't pay it back. Bastard. So she
Then they gotta foreclose. Good.
because you think because they're your parents, even though you promise to pay it back, you don't need to pay it back. That's what we think sometimes. But we're not supposed to do that. If we promise to do it, we should. Now, if we cannot for some reason, then we should fall on their feet and say, I'm sorry, I can't pay it back. Can I pay it back in smaller installments, or will you forgive the debt? Whatever it is, you just don't ignore the transaction. Now, if your parents give the 500 to you as a gift, then that is not a business transaction because there's no exchange, correct?
Gift.
Yeah. Usually a business transaction occurs when one thing is exchanged for something else. That's important to know. If it's money, it's called a money measurement because we're measuring it in dollars and cents. Okay. Does anybody know what the Canadian currency exchange rate is at the moment?
90 point something.
90?
I think it's 90 point something.
Does anybody have a phone? Google it.
It's more around like 0.7. I just looked at it today.
Why did you look at it
Yeah.
today?
I have to transmit what we call spot in the bank. So foreign exchange.
Indeed. See how this crap ties in? Somebody ties some in with the insurance company. Now she's spotting this whole thing. That's what I'm telling you. It's called an exchange rate.
It's
And
0.79.
sorry?
Let me see if I
No, for every Canadian dollar is 0.79 Bahamian dollar, 79 cents, I think.
yeah, hold on.
She's checking the exchange rate. See, guys, for those of you who don't know what an exchange rate means, now
Yeah,
you know.
0.79.
0.79?
Yeah. Yes, sir.
So if I send my baby another $250 for the millionth time, how much is that in Canadian? How much is that in Canadian?
298.
$200 converted to,
Oh, $250.
197.50.
No.
I can't live in Canada.
$250 US dollars, which is the same as Bahamian. How much is that in Canadian dollars?
That's $315.94.
Absolutely.
Oh, wow. 5, 5, 7,
And so now he'll
16.
be richer than me when I send him that money.
That's right.
God knows what he's gonna find to spend it on. Okay. So all of a sudden, the discussion now on exchange rates becomes very clear, I hope. All right. Does your chapter 1 give an example of exchange rates for different countries?
I saw it somewhere, so it does. It does. Yeah, it does.
What's that?
I think for every dollar is $1.07 in Canada, if I'm not mistaken.
That's on page 4. That's Australia. It's $1.07.
What
Oh.
what
Canada is a dollar.
Canada is how much?
$1 exactly, the US price.
It ain't the same. It can't be the same as US.
No, it can't be the same.
Unless I'm interpreting it incorrectly. I'm gonna say, yeah.
Well, let me put it
$1.
this way. At the time,
Oh, this is 2012 though.
sorry?
This one says Wall Street Journal, February 18th, 2012. It's 10 years ago.
2012?
Yeah, that's what it said.
What is the rate in 2012?
Price in US. Price in US for a Canada dollar is 1.00. I would assume that's even.
Each American dollar is $1.26 in Canada.
Now, maybe, but in 2012,
Yeah,
no, in 2012, it may have been par, dollar for dollar, just like the Bahamas.
Yeah, that's what it is.
Don't forget, our dollar is worth the same as the US dollar, dollar for dollar. Nowadays, the Canadian rate is what? 79 cents to the dollar. When my textbook, this one I'm looking at, was written, and whenever this was, it was 85 cents to the dollar. Now it's 79 cents. Okay? And so that means that you get more Canadian dollars for US dollars, correct? True or false?
True.
Yeah. Remember I said if I send 250 to Dante, somebody said he's gonna get what, 300 and?
$15.
Yeah. So you get more Canadian dollars for less US dollars. That's at the moment. All right. Okay, so welcome to the world of exchange control. And accountants need to know a little bit about that, because if your currency is not US or Bahamian dollars, you need to be able to convert it to the currency of the reporting country. So if you're preparing a financial statement in Hong Kong, you have to report in Hong Kong dollars. So you have to convert it to Hong Kong dollars. Okay? Same thing as the Chinese yen or any other currency of the world, the British pound and so on. All right. Then we have what we call the separate entity concept. So first of all, we have the business transactions, okay? And these, again, are ways that we measure in accounting. And they'll make sense a little later as we apply them. The first accounting measure is the business transaction, which is an exchange of goods and services, followed by the monetary measure, which says that transactions are recorded in dollars and cents, which is followed by the separate entity concept. What are we told that is? By the way, did I say how long our class is supposed to run each night?
Until 9.
Till 9. Oh, got it.
Sunday before Sunday.
Yeah, until 9. But I won't let you out 9 every time. I will let the class out a little earlier sometimes, because we keep going straight through. I don't give breaks and all that stuff. So from time to time, I'll let the class out like 8:40, 8:45. Unless we're desperate, we'll go to 9 o'clock. And then if we're really desperate, like the last night before the final exams, we might go to 9:30 even. But that would be a rare moment in time. All right. So if you see me approaching 8:45 and I'm still like, I don't want to quit, just like start shuffling something, hit the mic, tell the dog to bark, anything you need to do to get my attention, like, hey, we need to stop, take a break. All right. What is the separate entity concept?
That's when you, you may have, let's say, for instance, business, you separate your business funds from all of your personal debts or personal other assets or whatnot. So let's say, for instance, you have two businesses, you do a financial record of or report of that particular business, and you keep all of your, you don't mix up your liabilities with your assets. I don't know, something like that.
Something like that is correct. That's not bad at all. Okay, that's not bad at all. Essentially, as she said, the separate entity concept means to keep your personal business separate from your business. In other words, if you own a company, do not mix up your personal cash with the company cash. Do not mix up your personal car with the company car. Do not mix up your personal computer with the company's computer. Do not mix your personal cash with the company's cash. Do not mix your personal cash with the company's cash. You just shouldn't do it. How about that? Okay? So, but a lot of us, a lot of small business people, they don't care about the rules. They say, this is my business, I'll mix anything I bloody want to mix. Okay? And then they go ahead and mix. And then after a while, when it becomes necessary, you can't separate what is your personal from what is your business. And eventually that could become a problem in business. Okay? So better you follow the rules, don't mix them up. I do client consultancy all the time, especially for small businesses. I'm fighting with them all the time. Stop mixing your personal affairs with your business affairs. Keep them separately. If you want to do a report for the bank, you cannot have your personal stuff mixed up in it. Will give an incorrect what? Accounting, correct? The bank wants to know how much you're earning in the business. Don't add other stuff to fluff it up, so to speak, or to give an incorrect assessment by adding your personal stuff into it. They are supposed to be separate at all times. Many business owners still don't see that, and those who see, they deny it, like Peter, and still go ahead and mix it up. All right. Another popular examination question for me, the characteristics of a corporation, a sole proprietorship, and a partnership. You do really need to know the difference between the three of those. Period. Not only for examination. Period. For your life. Because they're out there all the time, swirling all around. Anyone, what is the sole proprietorship?
When one person alone.
When one person owns business.
That's it. See how simple that is? That's the easiest point you could ever make in life. As a matter of fact, if I ask that question, you get it wrong, I might take minus an extra point. I won't do that. I'm just saying it's too easy to lose a point. What is a partnership?
Partnership
Two
is
or
when
more.
business is owned by two or more persons.
Yeah, two or more persons. And finally, what is a corporation?
That's when a business is owned by two or more persons, where they more or less, like I was telling you with Family Guardian, they hire a board of directors to really run the company. And that's, they do a lot of stockholders and stuff with those type of companies and corporations.
Correct. At least that's a warm version of a corporation. Typically, a corporation is made up of many shareholders. Okay. Sole proprietorship, one. Partnership, two or more, but usually the partnership doesn't go beyond 50 persons. That would be considered a huge partnership, like an accounting firm or medical organization or something like that. Corporations tend to have multiple shareholders in the hundreds and thousands and millions in shares
Oh, wow.
outstanding. Okay? And that's the difference. Remember also, a corporation is a separate legal entity. In other words, it has to be formed and it creates its own life. It is separate and apart from the owner of the company itself. So once you set up a corporation, if you get into trouble, nobody can sue you personally. They'll have to sue the company because the company exists legally as a separate entity apart from the owners. So all the person who buys shares in that company, the bank cannot touch them. The bank could only take the assets of the company, sell it, pay off its debt, and that's it. They cannot come after your personal assets. Everybody understand that?
Interesting. Yeah, that's awesome to know.
Not us. Yeah. I told you, knowledge is a crazy thing, especially
Crazy.
if you impart it in a way to leave something interesting with those weird people called students. Just say it so you can remember. All right. But yes, you're right. I like how you said that. Like, it's interesting to know. Okay. And the truth is, it is interesting to know because it is very important to know way beyond your examinations and this course. See? And if you think you're seeing interesting stuff in accounting 1, wait until you roll into accounting 2, hopefully next semester. That's the next. Let me say something about that before I forget. I always tell students who are doing 2 parts to accounting, please don't do one this semester and come back next year. You could do that. And if circumstances make it that you have to do it, fine. But the ideal time to do the second part is right after the first, if at all possible. Why? Because all this stuff from accounting 1 is still swirling around in your head. And it makes understanding and dealing with accounting 2 significantly easier than if you do it a year or 2 later. For sure. So if you have to get your first loan in life, like we say in the Bahamas, borry it and do part 2 as quickly as you can. Can anybody spell borry?
No,
Borry.
can you spell it for us, please?
That's a good question. Can I spell it? Because borry is a tricky word.
RRY.
Okay, somebody came up with something. B-O-R-R-Y. Borry. Okay. Or B-O-R, like bore. Y. E-Y. Borry could be all kinds of spelling. That's the point with dialect. Okay. So if you need to borrow the money to do it, fine. Just make sure you do what?
Pay it back.
Pay it back.
Yeah, everybody's slow when it's time to pay, but we must say it slow. Like, yeah, we love to borrow, but we hate to pay back. If it's any consolation, Bahamians are not the only people in the world that way. Everywhere in the world, we have people that way. It is not unique to us. Okay. All right. So now we're into another very interesting part of accounting called this chapter just keeps going, but has a whole lot of interesting stuff that you need to know. We're now in the part of accounting that's called financial position, and that very important part of accounting that we refer to as the accounting equation. Folks, make sure you understand how the equation works, or else it'll take you a little bit longer to get things done. You'll get there eventually, but it'll take you a little longer than the person who gets it. Okay? So financial position for a company has to do with the assets in the company, the liabilities in the company, and the equity in the company. Now, what are those 3 items that we call the financial position items? Well, if you haven't read the chapter already, when you read it, you'll see that assets represents everything the company owns. Same thing with you. For you as an individual, your assets are everything you own. For some of us, that's only the clothes in our closet, but that's okay. Because in 10 years, you will own much more. If you are wise. And like Mario, stay away from
The mini skirts.
Sorry, I was picking on you youngsters.
You good.
Being young as hell. I can't believe I was ever that young in my entire bloody life. Okay. So this equation is very important. And here's how the accounting equation works. Okay. Anybody has come across it yet?
think
Is that the one, assets where owner's liability, owner's equity is added to liabilities?
Well, can you read the equation exactly as they show it to you?
Assets equals liabilities plus owner's equity.
Correct, and thank you. That is the accounting equation, which means simply this. Whatever is on the asset side of the equation, on the right-hand side, when we add what we owe and what we own, sorry, and what we invest, it should be exactly equal to the assets on the left-hand side. If it's not equal, you've done something wrong. That's the nature and the beauty of the accounting equation and the foundation for the accounting process.
Can you say that again, Mr. Wilkinson?
Whatever you own as assets on the left-hand side must always be equal to what you owe plus what is invested in the business, known as owner's equity. That long word, owner's equity, that just means what you invested in the business. Okay. So if you invest money in any company, then you become a shareholder or an equity holder because of your investment. Okay. That term equity applies to sole proprietorships, partnerships, and shareholders. We just call it different names. For a sole proprietorship, we call it owner's capital. For a partnership, we call it partnership capital. And for a corporation, we call it shareholdings or stockholders. Okay? So there you go, not difficult at all. So now that we know the accounting equation, let's just do a little exercise. By the way, in case I didn't say it before, you need a calculator for every single accounting class. The examinations included until the end of the 14th week. You will need them for your examinations as well. Okay? By all means. All right, so let's do a simple exercise with the accounting equation. Let's say the total assets of a company are $10,000. And the equity of the company is $5,000. What would be the company's liabilities?
$5,000.
Thank you very much. Somebody caught the equation sooner than they probably thought. Excellent.
Assets minus liabilities equals to owner's equity. Okay.
Okay. Does everybody see why the liabilities are 5,000?
Yeah.
Yes. Let's say total assets were equal to 50,000. Total liabilities are equal to 0. What would be the owner's equity?
50,000.
50,000.
Yeah.
Okay. If somebody's still not clear on that, speak now or ever speak whenever you feel like until you're clear. How's that? Okay, don't worry about it. If you don't get it right away, you can raise the question and we can do it again. All right. So we know what the assets are, everything the company owns. What are some example of assets?
Cash,
Yeah.
buildings,
Whatever.
What else?
inventory,
Inventory.
Property, building,
Property.
all of that. Vehicles.
Sorry?
accounts receivable.
Yeah, accounts receivable. Cool. That's one that students normally don't call right away, but that is correct. Does anybody know why accounts receivable is an asset?
Because you're waiting on them to give you the money. So it's kind of your money, you just don't have it yet.
Correct. How did it get your money?
They owe it to you.
Oh.
You say how? Maybe you did a service for them or you sold them a good and they haven't paid you yet.
So what kind of transaction is that?
Credit.
Yeah, credit transaction. Thank you very much. Man, there's hope for you guys. You got the future is in good hands. I love it. All right. And remember, do not measure your self-worth by the score you get in your examination. That's not always a good measure of what you learned. Okay, guys? A lot of people get good scores in examination and don't remember a bloody thing about what they learned, or not, nor can they apply it well.
That's true.
Yeah, and other persons may not get a great score, but man, they walking off with all kinds of nuggets, learn all
Yeah.
kinds of stuff. So yes, you will be striving for the best possible grade, but when you finish 14 weeks of study, do not let an exam grade only define what you have learned. I try to get students to see that as often as I could. Some do, and some don't.
I need
All
that
right.
8. I need that 8 to get reimbursed. So it's a must.
Yeah.
Oh, wow.
Call it God.
Okay. So now we're finally down to the 4 basic financial statements that you'll be looking at throughout the rest of this semester in one form or another, and when you do accounting too, throughout that semester in one form or another. The financial statements is the reporting side of the accounting process. Remember, measure, process, report. Report has another name, communicate, same thing. Okay. The first report that is important for accountants to prepare for management and others is the income statement. Does anybody have an income statement in the chapter 1?
Yes, sir.
Yeah. And if you look at the exhibit, what is the name of your income statement?
This is Rolling Consultancy.
Which consultancy?
Rolling Consultancy.
Okay, mine is Reese, same thing. Notice the name of the company is first, followed by what? What's
It's followed
under
by
the,
on my on
The type of
under the name
document.
is the income statement. Yeah.
yeah, the name of the statement, income statement. And what's under that?
That's the
The
statement of
Yeah.
That's what?
You said, oh, the month and then and the year.
Yeah, for the month ended or the year ended. Does everybody see that?
At a date, yeah.
Yeah, the date information. Every financial statement should be prepared with those 3 things in that order. So if I give you a question, ask you to prepare a financial statement, and you leave those 3 things out, you lose 3 points, even if your financial statement is correct. And I do that to remind students that a statement without a name, who's going to know? Do you follow?
Yes, sir.
Sure, those 3 things are on the top of your statement. In this case, the income statement. Then what follows?
Statement of the owner's equity.
Not that one. We're still in the income statement. What's the next item?
Revenue.
Revenues.
Yeah, revenues. Okay. And for this company, revenues are made up of,
Cost and
Fees.
expenses.
yeah, consulting fees.
So,
How much?
14,000.
Okay. Are there any expenses in this income statement?
Yeah.
Yeah, like,
Rent, salaries, wages. Wages, I should say, utilities,
okay, total expenses equal
5,600.
5,600. And therefore, does the company suffer a net income or a net loss?
Income.
Income of $8,400
How did we end up with net income?
because their revenue exceeded their expenses.
Thank you very much. Oh, I'm gonna be on the roll. Man, this is great. I love it. Because sometimes I have students like, what do you mean? What they have to say? Which is fine, but you guys are on a roll. So far, is this company experiencing profitability?
I'm not sure
Yeah.
how to answer the question.
I mean, from the income statement.
Well, yes.
Yeah, from the
Yeah.
income statement.
Yes.
Yes.
Is there net?
Don't read anything extra. As long as they are made a profit, it's profitable.
Yes.
Right.
Full stop. Don't read anything extra into it.
So as we
Doesn't-
speak, they would have a profitability of $8,400.
Anybody wants to answer that?
Yes,
Yes, you are correct.
yes,
Profit,
Mario.
8,000.
I thank you.
Is this company liquid?
Yes.
Yeah.
How do you know?
Well, I know
Yeah.
they can cover all their bills, but look, so 5,600, they should be able to, they liquid.
They're solvent also, aren't they?
Well, we
Yes.
don't know yet
We
because
can't say if they solvent, now that we can't
no,
say.
in order
Yeah.
to in order to determine solvency, you have to measure assets against liabilities first.
Yeah,
At the
Like,
moment, we're only looking at revenue and expenses.
but I would say they're liquid because their average, right now, we're looking at $5,600, I guess, for the bills on this particular income statement. And so they still have 8,400, I would say they're liquid based on this statement.
Well, yeah, if we assume
Yeah,
that the net profit is equal to 8,400 in cash, then they are liquid for this company.
yeah,
Okay, they manage the expenses pretty well, wouldn't you say?
yeah.
Which is not much. This probably just a what, two-person company?
Well,
Wages of $1,600?
now remember now, don't get greedy too soon. Even even though I know what you're saying. If you are one person consultant and you made $14,000 in a month, you will be spinning over cat guts, taking your girl in her mini out to dinner.
With
Mario,
$8,400
that's
profit,
Mario.
I agree.
IO. All right. So depending on the entity, that may not be considered a lot, but for a consultant, especially a young, budding, new consultant in the field, that's a lot of money. In fact, a lot of consultants today wish they could make half of that in any given month, depending on business for that month. Okay.
Yeah,
And clearly, this person is keeping the expenses to a minimum because at the end of the day, they're only spending 5,600 in expenses, so they have potentially 8,400 bucks in life. That's good money management. Thank God they had clients to generate what 14,000 in sales.
mhm.
Okay. All right. So that's the income statement. Then the next statement is the statement of owner's equity. What are we told that is?
Stuff that the owners own, or like pretty much a statement to describe
What you
the
invest in the business. Mhm.
Yeah,
yeah.
it describes the investment in the business.
Right,
Anytime you put money into a business, it is referred to as the owner's
owner's
equity.
equity. Mhm.
And so the owner's equity statement will show you the amount of money that has been invested in the business. Okay. For example, if this year you invest 10,000 in the business, what would be on your statement of owner's equity?
10 grand.
Next year, you invest 20,000 in the business. What would be on your statement of owner's equity?
30,000.
How much?
If you invest 10 one year and 20 the next year,
Yeah, let's say 10 and 1 and 20 the next.
yeah.
Would it be 30 if that 10 rolls over into the new year and the owner didn't make any withdrawals or anything?
Yeah, it would be 10 from the previous and 20 from the current.
Yeah, so it'd be 30.
So
Yeah.
it'd be 30,000
Mhm.
in the second year. Let's say in the third year, the owner makes another 10,000 but withdraws 5,000. What would be on the capital statement?
35.
35?
Yeah, because they put 10, which will bring it to 40, and they take 5 out, so bring it to 35.
Yeah.
Stick right on the ball. We're keeping that doggone ledger balanced. That's the way to go. Because that's a big part of it. Oh, I said it, chick. So that's just an old expression that they used to use back in the day when we had afros, like we call girls chicks. Do guys call girls chicks anymore?
Probably not. No.
Call them all kind of things now.
All kind of terrible names.
Good. That's a shame.
It is, by the way. I saw the immigration officer kick the lady in the street. Did you guys see that?
Yeah.
Somebody put on, I have this chat, I don't mess with chats much, but they forced me on this chat with this professional body that I'm the treasurer for, so I'm stuck with whatever they're doing. And somebody put on that chat, they wanted to know what my opinion was as a man with regards to that incident. I guess they wanted to know if I condoned it or not. Well, they got the shock of their life because I said to them, my opinion is he should be given some licks with the cat o' nine tail. Anybody ever heard about the cat o' nine tail?
Yeah,
I
my dad
certainly
told me
did.
about
Okay. I said he should be given some licks with the cat o' nine tail, thrown into prison for a minimum of 15 years. And when he comes out, a few more licks to remind him why he went in, if he ever comes out. And if he dies in prison or commits suicide, then that's fine too. My reason? Keep your hands off people in general and women in particular. Period. My chat went silent too. And I was happy to see that because I'm deadly serious. Mario
I'm listening.
and doggone Clint, are you there?
Yes, sir, I'm listening.
Good.
Ears
The
open.
two guys in this class, listen to me carefully. I'm going to
Yes,
tell
sir.
you the same bloody thing that I tell my son, my two sons. I don't care what she tells you. I don't care if she say you stink. I don't care if she say you poor and broke, dumb and stupid. I don't care if she call you ma black. I don't care if she say you smell stink. Whatever it is. I don't care if you walk into the house and see you with three guys hanging around in whatever capacity. Do not touch the woman. Am I clear?
Yes, sir.
Crystal.
I don't care how mad you feel. Walk away.
Yes, sir.
Did I
That's
make
serious.
myself clear?
You
Yes,
did.
sir.
Yes.
Clear.
Entirely transparent.
And this is something we need to be teaching our boys from they are little. Do not touch her. I don't care what she says or does. Walk away. Leave her alone for good if necessary, but do not touch, no matter how angry she makes you feel about anything. And on the other hand, we need to teach our girls, stop telling guys things to make them mad. Stop doing things to make them mad on purpose. Because sometimes, because sometimes guys say they can't take it and they say they lose it, and whatever explanation, excuse they give. I get it, but it is not suitable nor sufficient. Because when you do that stuff, all you're doing is setting yourself up for misery. Maybe prison. Worst case, death even sometimes. Walk away. Is that a debit or credit in accounting?
It's a devil.
No.
It's a credit.
Walking away is a credit to
That's
your
great.
character. Yeah, walking away is a credit
It's a
to your future and your character if you walk away. If you stay and kick her like that guy kicked in the road, beat her up, shoot her anywhere, and all this stuff, that is a debit to your character and your future.
Wait.
And look what it does to your family and everybody connected to you and your children. If you have, see my point, guys?
Yes, sir.
Don't do that. I don't care what she tells you. Come up in your face and say you're a stink, no good dog. Walk away. Simple as that. Now, if you're a stink, no good dog, walk away still. And if you're not, walk away still. See my point?
Yes,
All right. Good. Just so throw that in before, because it's a very serious thing. Okay? Guy just shot a girl last weekend, didn't he?
And the son too, or something like that.
Tried to shoot the baby.
Yeah, he agrees a bit.
Tried to kill himself. Imagine all that nonsense, just like on flicking TV. It's total madness. Don't do it, guys. and tell as many of your friends who are men, don't do it. It's a life ruiner. Nobody wins. It's nobody wins. Okay? All right. I don't care how mad you feel. I don't care how much money is invested in her. Whatever it is, walk away. Okay? Okay. Where was I before I got distracted? Oh, all of that came under equity. All right.
Yeah.
The third statement, which one is that?
The
Balance
balance
sheet.
sheet.
Yeah,
As an
the
owner.
balance sheet. The
Sheet.
balance sheet, yes. Notice in your owner's equity statement, did you guys take a look at the layout?
I guess, yeah.
You see the
Yeah.
headings
Sure.
are there as usual, right?
Mm-hmm.
Do not ignore the headings. They must be written up that way each time for each statement. In accounting, we like to do things repetitively all the time. So there's consistency. We don't write the heading one way this week and then next month, depending on how we feel, we write it another week. And depending on who get us mad, we wrote it. No, we don't do that. Accounting is very consistent. It follows the same process every single time. The only thing that changes basically is the
It's
numbers.
numbers.
Yes, and a new transaction coming in. Other than that, format remains the same. So we head it up properly. By the way, how much capital was in this particular company on the 1st of December?
Zero.
Nothing invested. And then how much did the owner put in?
200,000.
And what did the owner add to that 200,000 in that month?
8,400.
Which came from where?
The income.
Net, not
The
income.
net income, sorry. The net income.
Yeah, net income, exactly. And I'm glad you said that because in accounting, there's a
Right.
difference between income and net income.
Yes.
Okay. And after we add net income, we have a total of
2,800. I lied. 208,400.
absolutely. From which we subtract what?
The withdrawal.
So
The owner's withdrawal.
yeah, the owner's withdrawal, and therefore the capital at the end of December is equal to
206,000.
absolutely. And that's how it is always. The format does not change. By the way, that withdrawal that is the owner going into the business, taking money out for personal use. Do you know any people who do that?
You say, do we know any people who do that?
Yeah, in the
Yes,
real
me.
world. You do. Well, if you don't have a business, then it's not called a withdrawal. But if you have a business and you
Yes,
go
I
in
do
and
it
take
all the
out
time in my
money,
business.
yeah, you should not do that.
Cool.
Or, well, when I say you shouldn't do it, you could do it. But whenever you do it, it's called a withdrawal. And if you could ever put it back, put it back. If you can't, it just reduces your capital, right? Correct?
Yes,
If you,
correct.
if you take it out, it reduces your capital. If you don't put it back, then the capital is reduced by that amount. And it's okay to do that from time to time just to make a habit of it. Because if you keep doing it, what's going to happen to your capital base?
It's depleted.
Absolutely. Then you have another problem on your hand. And we're not going to have that discussion until chapter 2. Sorry, accounting 2. But now we're going to assume that everything is great, hunky-dory, and working the way it should. Okay. Now look at your balance sheet. Head it up again, correct?
Mhm.
Notice each statement has its own unique
Lane.
heading,
Mm-hmm.
but they all have the name of the company first, the name of the statement, and the date, don't we?
Right.
All right. What are the three main elements of this balance sheet that we saw in the accounting equation?
Assets.
Assets, liability, and the owners in the equity.
Aha. What kind of assets are in this company?
Cash.
Mhm.
Accounts receivable. Supplies.
Land and buildings.
And buildings.
For a total of
2,800. 2,000. What? 2,008. 208,400. Dread.
Okay.
All right, Miriam.
Dread.
Any liabilities?
Yes, $2,400.
Okay. And the rest is sitting where?
Owner's equity.
Okay. So if we go to the accounting equation that we learned earlier, and where we have assets, we put the total assets of this company. How much would that be?
208,000.
208,000.
What follows that number? The
100.
equation.
Minus the liability is 2,400
Not minus,
or plus.
not plus.
Equals, hold on, let me look at the equation you're talking about.
Assets equals liabilities
Yeah, the
plus.
thing that
Plus
follows,
owners in equity, that's what it's saying. Plus,
what follows the number, what follows the total assets is equal.
yeah, assets equals liabilities plus owners equity.
I know I know everybody's going ahead. I don't want you to go ahead yet. I'm just looking at the accounting equation step by step. Total assets are how much?
208,400
Correct. And the next thing that follows that is the sign equal.
equals, yes.
And what follows equal?
Liabilities, which is 2,400
Exactly. What follows that?
plus
Yes. Followed by,
204,000
which is called what?
owners equity.
So if we follow the equation and add liabilities plus owner's equity, what total do we get?
208,400.
Is that equal to the total assets?
Correct, yes, sir, it does. Balance.
Balanced. Does everybody see the relationship between the accounting equation and the balance sheet?
Yes.
Yeah.
Good. Because you'll need to remember that many times over in accounting. Any more statements?
Cash flow.
Statement of cash flows.
Yeah, the statement of cash flows. Well, the statement of cash flows here is an introduction, but you will see the statement of cash flows again later on. The important thing about the statement of cash flows is, notice how it's headed up again? It's the same as before as the others.
Yeah.
But the statement of cash flows, on the other hand, has three main categories. Anybody see that? What are the three main categories in black?
Is
Statement.
cash flows from operating activities, cash flows from investing activities, and cash flows from financing activities.
Absolutely. And what do we mean by operating? The day-to-day. Okay, cash coming in, cash going out, day-to-day. What do we mean by investing? Money going out to purchase assets, money coming in from the sale of assets. And finally, cash from financing, money coming in from borrowing money and money going out. For we'll see, because the money going out is very unique under financing activity. All right, so those are your three main categories in the statement of cash flows. What are some of the components under cash from operating activities?
Accounts
Increase.
receivable,
Well,
Increase
what's the first thing?
Net
net
income,
income,
Of how much?
1,400.
Where did that come from?
Right in the back here, off of the, that come from the income statement.
Correct. Please take note, it came from the income statement. And then the other operating activities are,
Accounts receivable,
and
accounts payable,
okay. So we see money coming in and money going out. We're gonna get to that later, not tonight. Tonight is introduction night to the statement. So the net amount going out is equal to how much?
the net
What
amount going out,
It's in brackets,
6,000.
Oh, 3,600.
3,600.
Oh, yeah.
Does anybody know how we ended up with 3,600?
That's
You add-
the
The 6,000 minus the 2,400 give you the 36. What you receive your accounts receivable minus your accounts payable.
The accounts receivable,
And the supplies
the accounts
minus the
payable.
accounts payable. Mhm.
Okay, so it's 4,000 minus
2,000.
minus 2,000, which is equal to 2,000.
No, that's not what I'm
No,
saying.
Okay, so there's the initial net income of 8,400. And then for some reason, there was an increase in accounts receivable. So that took away from the 8,400, 4,000, which brought it down to what? 4,400. Then there was an additional increase in supplies, which means they had to buy supplies. So they decreased that 4,400 by another 2,000, which brought it down to 2,400. And I don't feel like I'm making sense.
6,000. Yeah, what I'm saying is the accounts receivable is 4,000 plus the supplies is 6,000. And then they minus the accounts payable, which is 2,400 to give you the 3,600 is what I'm saying.
Yes.
correct. That is how we got the
Yeah,
3,600.
that's what I'm saying.
Yes. And then we deduct that 3,600 from
To 8,400.
That's what gives you the 4,800.
8,400. Correct. And so
Gives you the
cash
48.
flows from operating activities are actually equal to
4,800.
$4,800. So even though we started off with net income of 84, when we make the adjustments for those three categories, we actually ended up with cash not of 84, but rather
48.
48. What you need to remember at this point is that net profit is not exactly equal to money in the bank. In other words, we can see from this that even though you made net profit of 8,004, the actual cash in the bank was how much?
4,000.
4,800.
800.
Where did the rest of the money go? In those three categories.
We keep this up
Operating
bankrupt.
Yeah, we spend some money for some things and receive some money for some things. The difference equals 3,600 net, which is deducted from profit to give us the actual cash balance for this particular day. Okay, folks?
Yes,
Welcome to the cash flow statement. Then, of course, under investing activities, we have 40,000 in brackets. That's money going out. Brackets always means money going out. So if
Okay.
money is going out, we know it's going out because we said purchase land, right?
Right.
In order to purchase land, you have to pay for it.
Mhm.
So 40,000 in brackets. Did we pay for anything else?
Yeah,
Building.
purchase a building for 100,000.
Okay, so how much did we pay altogether?
140,000.
And we call this 140,000 cash going out for investment. Why do we call these two things investments?
Because they're buying them to help with hopes of using them to make more money.
Thank you
They're purchasing assets.
Increase your assets.
Yeah, they're purchasing assets, but primarily to make
Long
money.
term.
Yeah, for long term to make money, because they're going to use this land and building to generate sales for years and years to come. Okay, so that's what we say. We invest in it. So like when people are getting married, I invest my life in this man, and now he's talking about he's running off with a younger woman, and then she goes and shoot him. So I say to our girls, don't shoot anyone either. If he runs off with the chick in the mini dress, let him go. Don't shoot anybody. Don't beat up anybody. And don't run over anybody's children. Talking about you, Vex, because you invested your whole life in that stinking man, and he ran off with Susie Q.
Can't forget Bernard Shaw. Can't forget that one.
So now what I said to the guys earlier applies on both sides of the fence, and now you see why. Okay, so ladies, I say to you with the same emphasis, don't throw no hot water on the dude. Don't score him up. Don't shoot the other woman. Don't do none of that stupid stuff. Let it go. Walk away. It's amazing how it applies to both sides of the fence. Because people have been doing this crazy stuff for centuries. And here we are in the 21st century with all our technology. still doing this crazy animalistic thing. And then at the end of the day, I was mad. The devil made me do it. I invested my whole life. We come up with some answer to justify total madness. All right. Okay. And then what's the final thing on the cash flow statement?
Financing activities.
Cash flow from financing activities.
Yes.
Financing means borrowing.
Mhm.
So what's the first financing activity you see?
An investment from the owner.
Investment by owner.
Yeah, the investment by the owner means the owner did what?
Invest
Uh,
money into the company.
How much did the investor, how much did the investor put in the company?
200,000
Is that money coming in or going out?
coming in.
Coming in.
Good, good, good. What about the second one?
He
Coming
took
out.
some,
He withdraw. He
Yeah,
withdrew.
the owner withdrew, so that's money coming out.
Right.
So the net cash from financing is equal to
197,600.
why?
Because he put in 200,000 and he withdrew 2,400, which leaves a net income for financing activities of 197,600.
Man, for so late at night after all day, you guys are still sharp. This is great. Let me just finish while you're on a roll. Okay, so the net increase or decrease in cash is equal to how much?
62,400.
Where did that come from?
Okay, so that came from, I can tell you right now. So they took the, I can tell you right now.
Yeah,
That would have been from the purchase of the land and the building of the 140,000. So you would subtract the 140 from the 197,600 cash that they would have.
Let me add to that. You would have to add the 4,800 from up top, along with the 197,600. If you take away the 140,000, you will come back at 62,400.
Does everybody see that? She's right. But does everybody see it?
You have to add the 4,800 as well. From the
That's
net,
correct.
from the operating activities, you have to
Yeah.
add that.
So you have to add,
Yeah, anything that is out of brackets, you add. Anything that's
and
in
then
brackets,
minus.
you subtract.
that's
Okay.
that's so simple. Brackets subtract, no brackets add.
Absolutely.
You have to know
That's-
what to put in brackets.
That's
Yeah, guys,
true.
you have to know the put. But
They ain't gonna put it like this.
it's still important. It's still important to remember that the brackets mean subtract and non-brackets mean add. Some students have gotten stuck in exam and thought it was the other way around and egg it right up. Okay, so as simple as it is, be careful. Okay?
Yeah.
How much cash was there at the beginning of the month?
8,400.
Really?
No, was it 48? Was
No.
it 48?
How much cash?
48.
It's 14,000.
Go
You
to
said
the
the
You
bottom.
beginning?
start out with 14, right?
Go to the bottom of your cash flow statement and tell me how much cash was at the beginning of the month.
Oh,
zero.
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 Yeah, this company didn't have any money at the beginning.
Oh, yeah,
Yeah.
zero.
Shame.
Okay, okay. So therefore,
Yeah, you both.
after that adjustment, the actual cash at the end of the month is
62,400.
400.
absolutely. And how much sales did this company make?
Plenty money.
Well, you guys know because we saw it earlier in the income statement. That's why I want to look. How much sales did this company make?
14,008.
Mhm.
Yeah, that's the same 14,000 guy.
Jared, am I wrong?
Oh,
I feel
girl. Consulting fees, same company.
Yeah, 14,000.
Yeah, 14,000.
All right. Now, let me ask you something. Does your textbook show how these statements connect?
Yes, it shows the relationships.
There you go. So when you get a moment like after this class and you're so excited and you can't sleep, just look
Yeah, really. Sorry, thought I was on mute.
at
Me
this
too.
statement. Notice in the state in the income state, the statement of owner's equity 8,400, there's an arrow going from there to net income. So net income goes into what? The statement of owner's equity, correct?
Mhm.
Correct. And then the cash balance in the statement of cash flows of 62.4 is exactly equal to the cash balance sitting where?
In assets.
Balance sheet,
In the balance sheet, which account?
assets,
Which account?
cash account.
Cash account. And then the capital from the statement of owner's equity 206 is exactly equal to the capital shown where?
In T. Rollins
Statement of
Capital.
owner's equity.
Absolutely. All right. So not bad. You guys handled those 4 statements pretty well. Pretty well indeed. Okay. So, my God, it's 9 o'clock. The reason why I went to 9 tonight was only because we got off to a late start, which was not your fault. And I'll certainly make it up to you guys. I just wanted to make sure we caught up with the material from chapter 1, so that those of you who have not read chapter 1 yet, please go ahead and do it. It should be a little more interesting now that we've done this tonight. And those, and of course, for next week's class, please read chapter 2. I will be assigning homework, perhaps after our class next week. I won't do it this week because we did mostly conceptual stuff. But after our class next week, I'll be assigning homework for you so that you can start getting the practice early and getting into what we call the groove. Okay? A couple more interesting points in the next 2 minutes before we break. In accounting, we have a set of principles that we call generally accepted accounting principles. We will learn those later. Those are the principles that govern the accounting profession, and we are expected to use GAAP in all of our doings as accountants. When you get to reading, you'll see the CPA is the Certified Public Accountant, the professional accountant who is responsible for auditing firms, etc. They're expected to use GAAP, generally accepted accounting principles, in conducting their audits, as well as generally accepted auditing principles to make sure that they are following the rules. If you ever decide to become a certified public accountant or chartered or certified accountant, GAAP, and we'll learn some GAAP principles later, okay? But just know that those are the principles that govern the way we do this job as accountants. You don't have to be a CPA to practice GAAP. If you're a great bookkeeper, and even a non-qualified accountant, but you still understand bookkeeping and accounting well, and we have many thousands of people who are like that. There's some people who only do bookkeeping. They don't want to do accounting work and auditing, all that nonsense. They just want to process transactions, post them, produce the financial statements, collect the money. Okay, for sure. But GAAP are the principles of accounting, and GAAP, we have a set of auditing principles as well, which we'll see later on. You'll also see that there are a whole bunch of organizations which govern the accounting profession: the Public Accounting Oversight Board, the Association of Certified International Public Accountants. These are just all bodies that are regulating the work of professional accountants. Of course, I might ask you what CPA means, but I don't expect you to lose your mind if you don't remember one of the names of the governing body. If you do, great. Okay. The important thing is that you know that they're out there and they're governing the affairs of the accountants and bookkeepers in practice. Okay. And last but not least, I just want to mention 2 words: professional conduct and corporate governance. You've probably heard those words somewhere before.